Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, this morning, a very explosive morning for most of the currencies as the US dollar weakness was triggered by the FOMC rate decision by going 25 basis points. And gave the Australian dollar the strong momentum to rally from 75, 65 and up to the highs around 77.15. Now, in light of the current pattern, you can clearly see here from the recent times that we've challenged this 77 region, the market has failed. And while continuing to fail towards this 76.95 to 77.40 area, I expect to see the market eventually fall back towards the support holding now at 76.75. and lower towards 75.95.10. Now it is seen from 75.95.10 that the market will fall further with the objective still holding down there at 74.80. With the RBA bulletin and release at 11:30 today and also the unemployment figure may put a bit of stress towards the downside and see the Aussie actually sell off towards that support region. In the event we see a break above 77.40, this would see a short squeeze, but resistance comes in again firmly around 77.70. Well, as you can see with the FOMC's decision this morning, the euro rallies firmly away from that support of 105.55.65 and now challenges this near 5-week high around 107.35, which also, if you look on the 4-hourly, was a previous rejection around this area. In light of the current pattern, we could see a further squeeze to the upside. Now, it is imperative that the next 24 hours the euro weakness needs to return, or dollar strength has to return to see a move back towards 106.70 to 106.25.35. If we see a break above 107.35, this would see a short squeeze up towards the region of 108. And you can see here, it was clearly fouled previously in January and also in early December. That level again is at 108.20.50. So let's see how the noise plays out for the next 24 hours and see if the market does return to a bullish bias for the US dollar and a bearish bias for the euro. Well, dollar yen, very disappointing after the last 4 days. The market has since fallen away from that 115.45 level, now challenges this level of 113.40, and you can see where we currently are. With a low of around 32, I'm not overly confident that this market will break down further, but you have to say with the current events that's gone on in the last few hours that we could see weakness towards 112.55.70 if this is a true break of 113.40 and lower down towards an objective either towards that low around 111.60 or beneath there, which comes in at 110.60.80. In light of the pattern, I'm not getting overly bearish yet, but I'm very cautious to the way the market has played out over the last 12 hours. And let's see how the support and also this bull bear noise plays out. If we get a recovery, then the resistance comes in at 114.15.20 and then above there comes in at 114.80.90. Well, the pound dismisses the recent Brexit risks and instead takes force with the weak US dollar in terms of seeing a rally in the sterling as the dollar weakens. In light of the pattern, I am seeing resistance now at 123.20, which should serve as a cap. And with the risks of into tonight, with the Bank of England's rate decision, could actually see a bit of a flutter for the pound and actually see a move away from this region and look back towards the immediate support of 122.25 to 121.55, with that base holding at 120.60.80. Now, in the unlikely event we get a break above 123.20, this would give further momentum and short coverage and a squeeze up towards 124.50.80. But this is where the downtrend comes in. If you have a look here, if we just squeeze this up, you can see the downtrend clearly comes across there. Or if we go to the weeklies, the downtrend is seen here around 124.50.80. which should serve as a good cap or firm cap for the pound. But at this stage, I feel that the market is nearly at the end of its tether on the rally, and we could see a turnaround. Well, the gold ignites in front of that 1197 as the FOMC results come through of a tightening bias, 25 basis points, and now looks towards that resistance of 12.22 to 24. In light of the current pattern, I expect to see a rejection from there and see a pullback towards the immediate support of 12.15 and lower down towards 12.0709. Now, that being said, if we get a break above 24, this would see a further short squeeze up towards a target of 12.30 to a potential high of 1,238 and reassess from there. Well, for those who are trading gold, hopefully you got your shorts back in front of that firm support of 1660. As you can see here, the objective that came in since this decline did challenge that level. 62 was the low before rebounding very aggressively now to look towards this resistance of 1745. In light of the pound, I expect to see a rejection from there and look back towards the support coming in now at $16.95 to $16.80, with the firm base still holding at 60. If we see a break above 45, however, a short squeeze would ignite a move up towards $17.80 and reassess from there. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a great day ahead.